Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for a crypto highlight video. And if you're interested in any of the services I provide, please check out the links in the description below for both the Patreon and Discord. And if you would like for me to make an exclusive video just for you, please join one of the services I provide, whether it's a swing trade, day trade, or tutoring services. If you join any of those services, you will be eligible to give me a recommendation to make a highlight video just like this. Okay, let's get into it. Now we're going to be looking at MITX USDT. So this is Morpheus Labs. I've actually never heard of this, but it was recommended for me to look at. I'm looking at the KuCoin chart, and this is the monthly chart. So the information I'm seeing here is a downtrend. There's really not that much information. Now, what I can say is the selling has slowed down, but I'm sure it's also tied to that the liquidity has also kind of evaporated as well, right? So you had a lot more liquidity up here as you got bought up, then sold down. Then you had your nice little accumulation over the couple months, then sold down, nice little updrift these last these 3 months here, then sold down, and now it's like, it's really malaise. There's not that much liquidity here, but it's very tight. But I can't get much more information beyond that. So let's go down to the weekly, see if there's anything else I can see. Weekly, not as much as I would like information wise. I do see a trend line here that goes from here to here, but it's not really that relevant. As we go out to the future and the way this is trading here, it's not super relevant. What I'm seeing here, it's very tight, very tight. I mean, there's really barely any volatility here. This was the most volatile candle in a long time. There is a slight tinge of bearishness here, but I have to say, like, this can be read as accumulation, but I think it's going to be a little bit more time before it's confirmed. So, what we're going to do, let's put down some trend lines here on the weekly, because I'm seeing some key levels I think should be highlighted. So, the lows of this consolidation here from this dump here, I think we should pop a trend line right here. So we'll make this black so we know it's off of the weekly time frame. So this is a key level, because as you can see, this is the low wick of this consolidation before we had a nice little pop and before the continued drop. And then you had this wick here, test this level as resistance. So at around 0.0124, this is going to be a key resistance level going forward. And beyond that, I see, let's mark out this low as well, because we're seeing this also being challenged and failed off of a couple times. So right here, the low right there, another key resistance level here at 0.006390. So you see price come through, try and buy itself back above it, failed off of it three times within these 3 weeks, and then failed down, and now is in a super tight range on the weekly. This is extremely tight. And you know what we're going to do? Let's mark it on the weekly. So this is the low of this weekly range here. So the low right here is 0.00302, and then let's mark the high right here. So what we have here are 2 weekly ranges, in my opinion. Okay, so we have this weekly high range, which is right here, that coincides with this low, and then we have this low that coincides as the bottom of this overall range here, and then you have this as resistance, and now you have this really small tight range here. Let's go down to the daily, see how it looks. So daily, okay, so this is what I would be looking for if I was interested in MITX. So right now I can't see much opportunity here. However, I do see a low risk trade. Now, we are, in my opinion, in a very tight, low volume structure. We may end up seeing MITX float its way back up towards the high of this wick. You could look to play the breakout and potentially try and target, let's say, this fair value gap right here. So we have a bearish fair value gap right here that you could potentially target if you were to go long off of the break of this level. What I would suggest is I'd rather go long lower down here, so potentially right where we're at or as low as possible. Of course, though, you have to respect this low wick. So if this low of this range gets taken out, I would look to get out of this position. So the way I would structure my trade from here is look to try and get in anywhere from this level here to as low as possible towards the low of this range, and then pretty much have a couple points. So, we'll look to maybe give this a little bit of room, some breathing room. So maybe you can risk anywhere from 10 to 11%. Maybe if you're more comfortable with that, you can go more comfortable with this. You can go a little bit lower, depending on your risk threshold. Again, it's all dependent on what you're comfortable risking. But if this gets taken out, just look for more and more downside, because there's nothing here to the left that's going to protect you, right? There's no levels. You're in air. So what we're watching right now is an attempt to try and make some sort of floor, some sort of foundation, and this could be the beginning of it, right? So we could be seeing that this is the left shoulder. This could be a giant head coming, and then a failure, and then you have a right shoulder. But that's so far away, and we don't know that to be sure. But what we do know is right now we are in what I would say is somewhat of a range. We have a low risk area here where we can pop our stop loss, risking anywhere from 10% or less. You could even go down to the actual low level, the low range here, nearing 0.00302. If you don't want to give it that much room, you're risking around 8.3%. But if you want to give it room, 10 to maybe 12%, you can target the highs of this range, which is pretty good, about 1.8 risk reward. And then you can look to potentially try and ride the break. If this does break bullish, you want to target the low side of this fair value gap. So the risk reward is really good here. It's very cheap to be wrong here, because be prepared. Like, this is a place where you can be wrong for sure. There is a trend line here. It's not the cleanest because of how these wicks are structured. So essentially this would be your descending trend line. Okay, so you would look for this level to hold, and then you also have this structure here. Again, it's not going to be very clean because of how the wicks are formed. So this could potentially be a descending wedge. The reason why I'm saying potentially and I'm not really sure is because of how low volume there is here. Okay, there's just so little liquidity here, so you got to be very, very careful. Now, if this is a descending wedge, what's the one-to-one? What's the measurement? Where would it bring us? So let's bring this down here, and so this is about the one-to-one. So let's say this daily candle closes above this level, so it would from there theoretically be a break. Well, what a coincidence! It brings you right towards the top of this high wick, which is the high of this potential range structure. Okay, guys, and I promise I did not look at this chart before I turned this video on. I make that a big point in these highlights to try and come into these charts as neutral as possible, right? To give you my honest opinion, because it's just my opinion. It's not financial advice. I don't have a crystal ball here. I'm just giving you my opinion from the experiences I've had from trading and investing over a decade now. So, it's not surprising to me that this measured move does bring us towards this structure. It's not surprising at all, towards the top side of this potential range structure. So this is why, if I was going to go along this, and again, I'm not giving you that recommendation, I would do it now or as low as I can before it breaks this wick, right? Because if this does play out, then it's a very good trade. If it doesn't, then it's cheaper to be wrong down here than wrong up here on the breakout, right? So that's my thinking. But overall, MITX, Morpheus Labs, I'm gonna have a short-term bullish bias. Okay, very short-term bullish bias. I can, in the mid to long term, potentially start developing a neutral to bullish bias if, let's say, we see price continue to break out, right? So let's say price over these next couple days to weeks does play out this descending wedge structure that's potentially formed here, taps this range, creates a bullish consolidation, continues up higher, and fills out this fair value gap. Okay, starts messing around with this fair value gap, wicks up towards this level and breaks back down, and then we come back towards the top side of this range structure, which also coincides with the low side of this consolidation. So if we see something like this, okay, what do we start seeing? We start seeing an inverse head and shoulder structure. And I'm not the biggest fan of inverse head and shoulders or head and shoulders in general. However, there's proper context to these structures, guys. And I see it all over YouTube. Everyone does, they paint inverse head and shoulders so incorrectly. It's so frustrating. I've stopped correcting people. I let them do what they want. But there is a right way and a wrong way to inverse head and shoulders. There's no in between. There's right and wrong. The right way is inverse head and shoulders are bottoming structures. Head and shoulders are topping structures. Head and shoulders do not happen in a downtrend. Inverse head and shoulders do not happen in an uptrend. If you see that price action and it's shaped that way in an uptrend and it goes up, it's a coincidence. Okay? It's very important you understand this. It's not gonna form in the in improper context. The reason why this would be proper, that this would be an inverse head and shoulders, is because look at, you're in a macro downtrend. So it would make complete sense contextually that you would have an inverse head and shoulder being a bottoming structure. It's the same thing with a cup and handle. It's the same thing. Cup and handles are bottoming structures. You have a bottoming, a rounding bottom, then a bull flag structure, and then a break. That's it. Head and shoulders are the same thing. All right, they're not the same pattern, but they're the same thing. They happen at bottoms. So if this is going to be an inverse head and shoulder, that's going to take some time to be proven, to be validated, then I will start getting very bullish on this. But all I'm seeing is potential signs that we could be forming the head here, okay, from this potential left shoulder, because this looks like a left shoulder. And if this does end up being a move up from this wedge, it still has a lot to prove. It has to move quite a ways up to create a neckline. Okay, I know I drew that horribly, but you get my idea. All right, so keep that in mind. Keep that in mind. I'm not telling you this is an overly bullish asset. I'm just saying you could potentially be seeing a bottoming structure form here, and we just caught the winds of it. So thank you to I believe this was Drizzy who recommended me to look at this. This could be something, but it's not confirmed. It's gonna follow Bitcoin, and it's also not even confirmed in this range structure yet. This is not a confirmed range structure. It's just what I'm seeing based off the price action, based off how little liquidity there is, how slowly the selling has dwindled away. So I'm just telling you, be on the lookout for this. If you were going to go into this now, let's say you're going to buy some spot, it's not a bad idea. But watch out if this low wick right here gets taken out, okay? Because if that happens, I'm drawing horribly. I'm so sorry, guys. I'm so sorry. But if this low wick right here gets taken out, then I would say, either cut your losses, or if you're holding spot, be prepared to DCA in. Again, that's your own decision. It's not financial opinion, my financial opinion. It's just my opinion. Okay, just telling you what I would do if I was in your situation. But if it should hold this level, watch for at least the top side of this range to get tested, and then potentially this fair value gap on the daily to get tested. And if it can get fully filled, if it gets fully filled, that's when you're looking for a potential head and shoulder structure to start forming. Okay, all right, everyone, that is it for MITX. That's Morpheus Labs. If you know about this project, please let me know in the comments. I have not heard about this project once before now, so I would love to learn about it. I love learning about new stuff. And if you agree with me or disagree with me, please let me know in the comment section. And if you disagree, please explain why, because I love to hear other people's opinions, and I am not beyond criticism. I actually enjoy it quite a bit. So if you have any advice for me, whether it's constructive criticism or it's just a pat on the back, leave a comment below. Tell me what I can do better. Tell me what I am doing right, and I'll make sure to improve on both. And if you like my content, please give me a like, please give me a subscribe, maybe a share or two. I really, really appreciate it. I do think the Lemon Garden Discord and this YouTube channel is extremely valuable to a lot of people, whether you're an experienced investor, trader, or especially if you're a novice trader. I believe that the way I do things is very, very good and simple, and is proven to work. All right, guys, that's it. Remember, be patient, be vigilant, and be nimble. I love you guys. Take care. Bye.